All right, everyone. Well, good morning, good afternoon, and good evening, depending on where you may be in the world. My name is Sophia Arend, and I'm the Global Blockchain Business Council's Communications and Content Lead. It's my pleasure to welcome you today to the Global Blockchain Business Council and Global Digital Finance's Global Leader Series. This is a weekly global town hall we host with policymakers and business leaders around the world to hear their insights into their work, the state of blockchain and digital assets, and current global affairs. And today we have the pleasure to be joined by Michael Moro, CEO of Genesis and GBBC CEO and GDF Board Director, Sandra Ro, for a live conversation and audience Q&A on Genesis, a full-service digital currency prime broker. We'll discuss their offerings and solutions, as well as Michael's journey in the digital asset space and his views and insights on the state of the industry. Before we begin, I would like to briefly introduce Michael. Michael has been CEO of Genesis since early 2016, and under his leadership, the firm has grown to over 25 billion in annual trades, loans, and transactions, and has expanded from OTC trading into institutional borrowing, lending, derivatives, custody, and prime brokerage services. Moro led several acquisitions at Genesis, including Volt, a leading currency custodian, and extended Genesis' footprint internationally with offices in New York, London, and Singapore. He also served as COO of Genesis before assuming the role as CEO. He has an extensive background in financial services, having served as vice president and director at Second Market, which grew to 2.5 billion in transactions and was acquired by NASDAQ. And before Second Market, he spent 6 years working in investment banking at Citi, covering financial institutions including JP Morgan, Capital One, and Sallie Mae. He is a graduate of Georgetown University and holds several FINRA licenses. We are so pleased to have him here with us today, and I will hand things over to Sandra to get us started.
Great. Well, thank you, Sophia, and I'm delighted to be here with Michael. I've known Michael for a number of years now, one of the earliest crypto OGs I met in the space, and we're going to have some fun. Michael, good morning to you. Thank you for spending the time. We know you're very, very busy, but let's just dive right in. Can you tell us a little bit about your background beyond what Sophia's already mentioned? You know, you got into the crypto space very early on. What really attracted you to spend your time and your energy and your effort to dedicate your career and pivot like that?
Well, thank you, Sandra. I'm happy to be here, and hi, everybody. Sure. So I get this question a lot, and I'm always kind of stuck as to where to start. And it's funny because you think about the start of the story, and you're like, oh yeah, I know what that is. And you know, I come at this. This was 2013, and at the time, Second Market, which is sort of the predecessor business to Genesis. We were a broker dealer that was trading illiquid financial assets. Things that are natively illiquid or things that became illiquid as a result of the financial crisis. And I was on the bond trading desk at the time. So the kind of, asset-backed securities, mortgage-backed securities, things that were used to be worth $1 were now worth cents on a dollar, and creating a secondary market to kind of trade that. And right around, kind of January, February of 2013 is when we first got started in Bitcoin. The first time we heard about Bitcoin was probably 6 months before, in kind of middle of 2012. Second Market's founder, Barry Silbert, who's currently the founder and CEO of our parent company, Digital Currency Group, he himself discovered Bitcoin in 2011. And I think he kind of went down the crypto rabbit hole, going from like the skeptic to like full-blown evangelist, that phase conversion over about, probably I'm going to guess 3 to 6 months. And then kind of in the latter half of 2012, he'd come into the office and just talk about Bitcoin all the time. And at the time, Bitcoin had nothing to do with our business. But we were like, all right, either tell us what it is or just stop talking about it. It just started annoying us because that's all he talked about. And so, all right, so it sat us down, talking about Bitcoin. And it really sounded very similar to all the other assets the Second Market was trading at the time. It was illiquid, off the run, esoteric, funky thing. And we said, all right, we already trade some of this other stuff anyway. Why don't we just kind of start making a market in it? So that was a kind of our first foray into figuring out it was kind of running concurrently with our personal journey into Bitcoin, which really kind of gets started when Barry decided to give each employee 2 Bitcoins. He said, get 2 Bitcoins, create a wallet. So we all went to like blockchain, which was like the only personal wallet you can really kind of get at the time. We had to create our own wallet, get an address. We had to give the address to Barry. He sent us 2 Bitcoins. Every employee got 2 Bitcoins, 1 for keeping and 1 for spending. And so we had to, like, all of us are researching online for all the places you can spend your Bitcoin, and then, but that was like really the first hands-on experience, I think, with Bitcoin. So as we were starting to trade it, we're also trying to play around with it ourselves. And that was kind of really the beginning, but it took us forever to really like understand it.
Yeah. No. Can you divulge what you actually spent your first Bitcoin on? Because
I can. Yes. So what Sandra's obviously alluding to is there's not a lot of legal businesses that accepted Bitcoin back in 2013, and I think most of us either got like alpaca socks or there was a winery in Australia that accepted Bitcoin called Bean Plate Winery or something like that. And so we said, all right, I'm going to get a case of wine with my 1 Bitcoin. And the Bitcoin was like $90 or $100 at the time. And so I said, all right, case of wine from Australia. We drank it. It wasn't very good, frankly, but it was something to kind of do with it. Obviously, looking back, it is now the most expensive case of wine that, I'll ever purchase. And I actually looked into it. The winery no longer exists. It is not in business anymore. Hopefully they kept their Bitcoin, got really, really wealthy, and are off to retirement. But yeah, that's what I did with my 1 Bitcoin.
Yeah, I have to say, familiar setting. I spent mine on beer, buying a round of beer at an underground crypto bar in Berlin, and the beer I've ever spent in my life too, kind of around that time. Well, so you said for us kind of how you got into it. Awesome. And then obviously the start was second market, but then you evolved to Genesis. So tell us a little bit about Genesis origins, because frankly, I met you at an FX conference. Actually, we met a few times in various conferences and whatnot, but we really started getting to know you as DCG, as Genesis, and you were an OTC trading firm for Bitcoin.
We were. So let's take a step back. So 2013, we're still second market. And we said, okay, let's start creating an OTC trading desk. Let's start matching buyers and sellers. Sellers would be the early adopters. And the buyers, we were hoping were institutional guys, but like it was way too early for kind of the East Coast institutional kind of investors. And so we said, okay, we had the sellers on the one hand who were very like anarchist, right? Like libertarian, banks are bad, intermediaries are bad. And here we were, a broker dealer that were coming in, collecting, driver's licenses, AML, KYC, and they were like, oh my God, you're the man. Like, we're the guys, like, we're trying to get you out of business, right? And so we're trying to insert ourselves into that world. At the same time, we're pitching these like East Coast hedge funds to buy Bitcoin. So both sides thought we were crazy. Like, we just didn't belong in either side on the sellers and buyers. And it really took us a long time for us to figure out who we could work with as far as kind of the sellers, the early adopters, and the buyers were really like the West Coast, Silicon Valley VCs. Personally, started to kind of dabble. For one, it was more of a tech play more than kind of anything at the time. And Bitcoin at $100, I mean, the possibility of it going to zero was real. I feel like it's less real today, but it was definitely real at $100. And so, but this idea that Bitcoin might either go 1,000x or go to zero, this kind of like binary outcome really fit kind of the West Coast Silicon Valley venture capitalist portfolio, who bets on like 100 different companies, 95 of them go under, a couple of them do okay, one becomes Facebook type of, risk return threshold. And so we found kind of our core buyers in San Francisco, Palo Alto area to kind of start with. And alongside that, we started the Bitcoin Investment Trust, the vehicle that is now kind of known as GBTC at the same time. So our first buyers were literally the West Coast guys, and then the trust. Anybody that didn't want to custody the crypto themselves, but wanted kind of that exposure, right? Now, alongside of this kind of Bitcoin and fixed income, like the bond trading business, we were still running. So we had basically two different things. We also had a number of other asset classes we were trading, all of which we sort of exited, with the one exception of private company shares. We were really famous back in second market days for trading pre-IPO shares of Facebook, LinkedIn, Twitter, kind of like the hottest late stage private companies that were VC backed. Right. So towards the end, we all had two businesses. We sold that private company business to NASDAQ. So that became NASDAQ Private Markets, and which kind of got interesting because towards the end, Coinbase shares were trading on NASDAQ Private Markets, which is the old second market business. Right. And so that was really kind of funny. But when we sold the business, we had to rebrand. The second market brand went to NASDAQ in the transaction. So all of us had to come up with our own brand new businesses, which led to a reorg. Where the broker-dealer became Genesis, the asset management trust business became Grayscale, and then we created the holding company above us as our owner in Digital Currency Group. And then, you and I met through the CME's investment in Digital Currency Group, whenever that was in 2014, 2015, whenever that time frame might have been.
I think we were like the first round of institutional investments. Yeah,
that's correct.
So when I look back on that, by the way, it feels like a lifetime ago. So that's basically how you guys transitioned. At what point did you think to yourself at Genesis, once you did the reorg, we have a real business on our hands? Like, this really is something we need to build out. It's not just OTC anymore. It's actually well beyond that.
So, for DCG, Genesis, and Grayscale to exist, you had to have core beliefs, right? One was that crypto was an asset class and that institutions will get involved, and that there would be firms needed to kind of bridge crypto and kind of like Wall Street. Now, those were three things that sound more obvious now, but back in 2013, 14, getting started, those were franchise bets, which if you got those beliefs wrong, you were out of business anyway, right? So we already said, okay, we're willing to make that bet that this thing was here to stay, institutions will do this, and therefore we need to start building, right? So once you kind of got beyond that, and then we had the Mount Gox event happen. Right. So we launched our trading business in early 2013. Towards the end of 2013, at a price run from $90 to $1,300. And then in January, February, Mount Gox, you heard rumors that they were insolvent or hacks or whatever. And then when that happened and that became public, we're like, oh God, this is it. Bitcoin might go to zero, right? And while we had a massive retrace kind of back to that $150, $200, $100 level, it didn't go to zero. So we're like, okay, and Mt. Gox along with Bitstamp were the really only two exchanges that were around at the time. And so if that didn't go to zero, it didn't rise up and kind of recover right away, but it didn't go to zero. So it's resilient. All right, so let's kind of build off of that. 2015, 2016 were real bear markets. And those were tough but it also allowed us to kind of plan our future and what it might look like. Now, we knew that Wall Street, when they get in, expected certain products and services, right? And we knew we had to build those. But building that in 2014 would have been way too early, right? We would have no customers, no traction. So we said, okay, let's build it out. So, when this became real was early 2017, late 2016, early 2017, when sentiment turned. And obviously, this is a retail-led asset class. And so the retail-led ICO boom of 2017 was really when institutions started to take note. Now, they were not participating. They were on the sidelines, but they're like, what is this thing? It's really going up. And this is something we need to pay attention to. And in early 2017 is when we decided, hey, we should create a borrowing and lending business, right? Now, that exists. Spot borrow didn't exist at the time. If you wanted to short or hedge, you had to use like BitMEX or one of the crypto derivative exchanges. I said, okay, 2017, we planned it. We launched it in 2018. Just a couple of months after the CME Bitcoin futures product kind of got launched, we created our lending and borrowing business, and then just ultimately kind of building from there. So building blocks, one piece at a time, which also led us to just focus too. It's hard to try to execute multiple things at the same time. And so we had the trading business. It started doing a lot of volume. We hit $1 billion in November of kind of like monthly trades. November 2017 was the first time we hit $1 billion in notional trading. And then we launched our lending business just a few months later.
Amazing. And as a parallel to that, I'm going to also highlight to folks who don't know already, Michael was instrumental in helping with launching the Bitcoin index products, because he sat on the committee that we created. Remember that? Well, you're still on that committee.
I'm still there. Yeah.
So I remember we sat around the room, and this is back in 2014. We conceived the concept of Bitcoin index products in order to create then a dollar settled USD cash settled futures for Bitcoin. Because that was the only way it was going to work. It physically settled, just we knew out the gate, which is never going to happen because the infrastructure wasn't there. So with that, I remember we looked at every crypto platform that was out there, and let's just say there was a lot of, interesting stuff under the hood. But remember walking and like thinking about who could we bring as an outside, experienced, credible person who could sit on this benchmark committee basically and give some credibility to this space. And your name was just top of book. And I'm always appreciative, because you could have easily been like, what the hell are you guys doing? But you really got into the weeds, understood what we were trying to do, and really supported. So.
No, look, I mean, from my perspective, I was like, oh my God, the CME cares. Right. And looking back, obviously now we have, the Fidelities of the world and kind of the traditional financial institutions really playing a role. But back then, like having CME futures was like, wouldn't it be great if one day we get kind of the big, the powerhouse traditional financial firms to create Bitcoin products. And the fact that CME was interested was like, yes. So it was way more of a, how could we not be involved in kind of the effort to try to do something? And so it's been fantastic. Yeah, I've been a part of that, the index committee for a number of years now. And when it was all thanks to your invitation.
Wow. Look, anyone who says that big firms and smaller firms can't work together, actually, I think it's imperative when you're talking about areas like this where people are trying to innovate and still find, how to innovate. It's very difficult for a very large firm to do it on its own. And frankly, at some level, it's sometimes hard for the startups to just do it on their own too. So, I always believe in collaboration. So this is one area where we're very grateful to you, Michael, in particular, for that early stage assistance and dedication to support, because there's a lot of stuff that we actually had to get through internally to convince people that we should even be looking at this. And it's the help of brains like yours and, Dr. Schlafer as well, who is our partner in creating this. So anyway, we're better working together.
Absolutely. Yeah. Agreed.
Now trading what? Open interest, several billion. So frankly, also the power of an idea can turn into a real product, given enough right players working together and getting it out there. Let's talk about where Genesis went from then conceiving the loan business, how you've evolved in the last couple of years, because really, I mean, when I see the action and the growth, it really has been during COVID and very recently in the last X number of months. It's not really years and years.
Yeah, no, it's crazy. So we had the OTC business, right? So we had that for 5 years, and that was the only thing we did. But we were really like developing the pipeline between sellers and buyers. And because we were a broker dealer, we also had our BIT license from the state of New York. So we were the most kind of regulated, trusted counterparty for institutions to really kind of get involved in buying and selling of crypto. So we were building out the pipelines and liquidity. And we said, so we were growing our transaction volumes every single day. Our lending business has been, way more successful than I ever really thought. We effectively started at $0 of loans in March of 2018, and we'll release our first quarter report in a couple of weeks. But as of today, we're north of $10 billion of loans outstanding, which if you look at just pure loans, that puts us in like top 100 banks in the US or something, just purely kind of based on our loan portfolio, with significant synergies, right, between trading and lending businesses and whatnot. And then we decided to go down the prime broker path. In the institutions are going to want this. PBs exist in equities and whatnot, and the biggest hedge funds in the world are used to working with PBs. So let's do it. The missing piece was custody. We were non-custodial. Everyone had to work with their own wallets or a different custodian for years and kind of working with Genesis. And so we decided to acquire a UK-based cryptocurrency custodian called Volt transaction, which closed about a year ago. It was May of last year in which you do this. And now I certainly don't, look, M&A transactions are hard. International M&A transactions are even more complicated. And then M&A international transactions in the middle of a pandemic makes it even harder to try to integrate. But today what we have is an institutional grade platform, a brokered platform for institutions to buy and sell, borrow and lend and hold. So basically across the entire spot spectrum of crypto. And in addition, we launched a derivatives business. We started trading options towards the end of May of last year. And we're doing sort of, billions of dollars of transactions a month on the option side as well. So today we have a business where we do about 2 to 3 billion of spot per week. And we're doing billions of options notional on a monthly basis. We have the $10 billion of loans outstanding, and then like a fully insured custody product registered with the FCA in the UK. So yeah, to Sandra's point, and we've come a long way here in a short period of time from zero.
I just can't believe the number of B's or the B billions that you're talking about now, because I mean, even a few years ago, a few million would have been like, all right, that's awesome. We got liquidity in the market. Come a long way.
We have, and frankly, I think the challenge, for a business like ours is that we've come from a regulated background. So it's really trying to get a hold of what's the regulatory framework look like, not just kind of in the US, but like abroad, right? As mentioned, we have a business in London, we have an office in Singapore, we have different legal entities and different regulators, and they all interpret crypto a little bit differently as to what we can and can't do and who we can serve and who we can't. So it's really like a jigsaw puzzle of fitting different pieces together. And on the other side, though, the core of crypto is still tech, right? And so tech CEOs and founders, I think, approach this from a, what can we do? Like, what do we want to do? Let's build it. I come at it from a, we're regulated, so what can we do? And I think it's two different approaches to trying to innovate and push the ball forward. But institutions still feel, I think, the most comfort in trying to get, the right AML, KYC and onboarding and regulatory license, and feel really, really good about the partners that they're working with in the space.
Fantastic. You're starting to get some questions coming in, and for the audience, please do feel free to ask questions, but I'm just going to pose a few more to Michael so that we could kind of round out the topics I wanted to hit. before we go to questions, but you actually led perfectly into my next subtopic, which was around regulation and how you operate. You've clearly said you've got multiple entities, you have different regulators, you adhere to obviously the compliance and regulatory regime. Is the single biggest friction point that would alleviate some of your challenges on the regulatory side if there was more commonality or a baseline of how regulators viewed crypto? Is that you think the biggest issue, or do you have other challenges that you would mention?
Yeah, look, I complain often about kind of regulators as a group, but they have a really, really difficult job. This space innovates and changes so frequently and so fast that even as an operator in the space, it's hard for me to keep up with everything that's happening, especially with DeFi. Yeah. Right. I feel like there's new products and services coming online, new smart contracts to evaluate, all of that stuff all the time. And if I'm a regulator, how do I get a hold of this and get my arms around it? But yes, yeah, for sure. Harmonization of rules and laws would be very, very helpful. In the U.S., we don't have a Bitcoin regulator, right? It is not a security, so the SEC doesn't touch that, and until it hits the derivatives area, the CFTC doesn't touch that, and so spot, Bitcoin, Ethereum trading, that kind of falls in the cracks federally, and so it's regulated at the state level. And different states have different rules as to what you can and can't do and which licenses you need, which makes it hard. And then around the world, XRP may not be a security in the US. The SEC thinks it is, but other countries around the world are coming out and saying XRP is not a security. It's just like Bitcoin, it's free to trade, right? And so that harmonization, I'm not naive enough to think that we're going to get there, but yes, absolutely. It would make my life a lot easier if there were more of it.
Well, what is encouraging is we're seeing more and more regulators, at least speaking to each other, whether it's closed door or more publicly, trying to get their arms around the ever-changing world of crypto. But I agree with you. I think we'll be challenged for quite a while. One is the education gap, just because it does evolve so quickly. And we're having issues ourselves as, people in the space, let alone someone who does it part-time. And then on top of that, I think we've had a history, right? You come from financial services, there's always a bit of arbitrage per jurisdiction, depending on the rules that get made.
Oh, absolutely. And which, you mentioned the word arbitrage, it is legal and jurisdictional arbitrage. And which makes it really hard for incumbents. The bigger you get, the harder it is for you to remain nimble. And so I think startups in the space can react much, much faster and spot these arbitrage opportunities and execute, I think, in the crypto world than kind of in traditional financial services.
Yeah, absolutely. And then I'm going to ask you one more question before we go to actually the audience questions. You're getting quite a few here now. When we talk about institutional interest, you said you started off with, you pitched to the New York guys, but, frankly, it was really too early, and the West Coast guys kind of got it and got involved. Today, we see a much wider panoply of different types of institutions. Can you talk a little bit about the corporate treasurer? Because in my experience as a former banker, the corporate treasurer or the corporate was typically the most conservative and difficult to kind of convince to do anything new.
Oh, you're 100% correct. I think from I kind of explained the binary 100x or 0 to the West Coast. The East Coast guys are clipping the S&P 500, right? So they were happy with a steady 7 to 8% a year returns. And it's interesting, as Bitcoin kind of transforms from that 100x or 0 to more of a 7 to 8% scenario, you get a lot more of the East Coast buy-in, right? When it becomes more boring yet stable, and the possibility it goes to 0 becomes less and less, I think you'll get more and more East Coast guys and fund managers involved. Now, corporate treasury. When you think about people that are most likely to invest in Bitcoin, you can kind of force rank them from kind of the individuals, retail guys, all the way to sovereign wealth funds, right? In kind of the scale. I would have put corporations towards the end. I would have thought that they would be one of the last ones to kind of invest. And because frankly, corporate treasury isn't supposed to make money. That's not what it's there for, right? It's for safekeeping, conservative assets, don't lose the money. And kind of given the Bitcoin volatility, I think people would have said, well, no, it's not supposed to take risk. And certainly what I think we saw in the course of last year with the micro strategies and the Teslas and the Squares coming out and kind of putting Bitcoin in their balance sheet is like, look, I could hold this in dollars, but inflation is coming, meaning the dollar is worth less. It is guaranteed to lose money over time. And so why not take some portion of it and put it in Bitcoin, which might be a hedge against kind of the falling dollar and this idea around Bitcoin becoming a global reserve currency. Now, it was global reserve currency seemed like a pie in the sky idea, but like I feel like more people think it's possible now than ever before. Given kind of the pandemic and the capital infusion and the money printing that we've seen, not just in the US, but around the world. And so now they said, okay, I'm now wanting to diversify into assets that could appreciate in value and have a future store value idea is very new. At the same time, it's real. There are now dozens and dozens of companies having done this. And I looked at our data in February and March. 25% of our transactions were with corporate treasurers, which is mind-blowing that we're doing billions of dollars a week, and a quarter of it was facing a corporate treasurer's balance sheet. So, and this is more real in the outside the US as well. And certainly higher inflation countries were like 20%, 30% inflation a year. Rather than hold my own fiat, I'm going to put some Bitcoin on my balance sheet. So it has certainly been a surprise for me personally, but the narrative and kind of the rationale is definitely sticking.
It's surprising to me, just having interacted with corporate treasurers for years, that you've had this kind of movement. It's pretty interesting, and I have to say, we should all never say never, because frankly, things evolve and there are paradigm shifts happening. I think this is actually where a lot of the incumbent institutions are having a hard time wrapping their heads around how, for example, a Coinbase could be the largest exchange in the world by market cap. Mm-hmm. Or how could, and it's interesting because I hear the terms from some of the incumbents, well, it's like it happened overnight. It's like, well, no, actually they've been around since like 2012. Something like that.
Yeah, they have, but like to them, like Bitcoin is still new, right? It's been around for over a decade now, but it's still new in the overall kind of scheme of things. And but like, and I think for incumbent banks, the JP Morgans, the Citis of the world, Goldman Sachs, they're trying to figure out how to figure it out. And then there's still the other banks, so like an HSBC, that won't allow customers to trade MicroStrategy stock because of crypto exposure, right? So you're almost begging to become irrelevant, in my view. When you kind of take that, we're still going to fight it, still say no, rather than kind of like accept it and really like adopt and adapt your business to kind of what's happening.
Well, I think Genesis is really unique in the sense that you have literally carved out a very critical space inside of the cryptocurrency world that bridges the gap between taking some of the old world infrastructure that's needed to make cryptocurrencies liquid and actually scalable within the rules of the regulatory environment. Mm-hmm. And that sort of crossing, sitting in both worlds is a very difficult thing. And frankly, like you said, it's almost like misfit toys. Like you don't really belong mm-hmm. here. You don't belong here either. But you guys have managed to figure out how to belong and actually, frankly, flourish, which is fantastic. So I'm going to go to a couple questions because a few people would drill down into some of the specifics around what you're offering. And clearly some of these folks are finance folks because they understand prime brokerage. Okay, so Nicolas asking you from a PB standpoint, the only service you might be missing would be Cap Intro. Is leveraging the DCG network to provide that service to your clients in the pipeline, or how are you looking at Cap Intro?
So if you went to genesistrading.com's career page, we're actually currently hiring for a Cap Intro person. So that is squarely in our roadmap. for us, I think, trying to find, there's crypto funds, whatever strategy you want, long, short, market, whatever it is, like they want capital. I think the biggest is kind of is helping kind of the family offices figure out what's real and what's noise. And I think the capital introduction role could be a good fit for as far as applying the kind of that client service, and that's sticky capital, right? And certainly I think the hedge funds would definitely kind of benefit and frankly kind of give us more trades and volumes on trading and lending side of the house as well for, if we're kind of successful in helping them raise. So that's there. That is squarely a 2021. I almost said 2020 because I forgot what year we're in. 2021 initiative for Genesis.
Excellent. Well, actually, Nicholas asked one more question as well. Because they're kind of similar, group them together. So the exchange landscape is getting more concentrated. There's still a lot of fragmentation out there, a lot of different platforms. But as it consolidates, as we see more kind of behemoth players in the market, how does that affect your value proposition as a liquidity provider? Do you like the concentration? Do you like or not?
Look, I think that the fewer venues you have probably like less arbitrage opportunities. If I'm a client, if I'm trying to take advantage of price discrepancies around, as a liquidity provider and aggregator, for us, that's fewer exchanges we have to like plug into. So that certainly kind of makes it easy from a tech infrastructure perspective to only work with only a handful of exchanges, as opposed to 20 or 30 that we're currently trying to work with today. Now, at the same time, for us, the crypto market is still like the exchanges is real, but the OTC channel is also really real. And there's a significant percentage of people that are still doing stuff on Telegram or on text messages, or they call in, and those volumes don't hit the exchanges at all. Right. And so the value of a Genesis is you get kind of the exchange liquidity, plus we have our bespoke OTC liquidity as well, and which really allows us to give our clients kind of the best pricing depending upon which of the two channels is pricing tighter.
And just a question from my side. I mean, a lot of the OTC flows often were quite lumpy and generally larger than the exchange traded stuff. Is that similarly today? Does it follow the same sort of pattern? If someone's got will they go to the OTC?
Yes, they will. They'd rather go the OTC route because it is because the spread takes account for slippage, right? And so you're like, okay, bigger trades, I'd rather execute it OTC as opposed to try to hit the exchanges with it, and really move the market in one way or the other depending upon which direction you want to go. But corporations are now they want to execute on a TWAP, a time-based approach. Meaning somebody wants to buy $10 million worth of Bitcoin, they may not execute it all at once. They may say, okay, I want that done over 6 hours. And then it's only a little bit, on an hourly basis. And so even if you sent that order to the exchanges, it won't kind of move the pricing markets too much. And so people are now coming up with various time-based strategies. But in times of falling knife scenario, over the weekend, when you saw the price of Bitcoin falling quite a bit, you'll definitely see a lot more OTC flow because they're trying to execute and get out right then and there, and they kind of need a risk bid from us because the exchanges are moving around so much.
And I think Michael, you'll remember we talked about this a lot when we were thinking about how the futures contract would be written. That the futures market has a gap. There's gap risk because you've got Asia. You're sitting in New York, all happy on a Sunday afternoon or Sunday morning, and you're getting completely screwed because Asia started trading, and you've got futures positions or you've got a lot of open positions that then you have this price gap risk. Is that still a real thing? I mean, I feel like it happened over the weekend.
But it's still a real thing that exists. However, there's now a lot of crypto venues, kind of the FTXs, and that provides kind of a 24/7 liquidity. So there are kind of ways to hedge that gap risk as well that some a CME product might create. But at the same time, because the liquidity has picked up so much in kind of the spot market as well as on other derivatives exchanges, there are now ways to kind of hedge that out. But not everybody can play on those exchanges, right? So there's still a lot of guys. It's like the only risk I can take is a cash settled product on the CME. That's it. And so, I think you're putting limitations around and creating additional risks for yourself when that's the only product you're able to kind of access. So I think that's a challenge that a lot of the incumbents that say, I'm going to go to CME first, everyone else later, that kind of creates limitations.
Yeah, and look, there's some really, unfortunately, challenging structural issues that you can't just have 24/7, 365. It just doesn't work that way. And unfortunately, yeah, we talked about that a lot. And let alone the basis risk, because you're settling to the dollar, not actual Bitcoin. So that's another issue. Anyway, but for some, you're right. It's the only option for now. And there'll be more products and there'll be more enhancements down the road, I'm sure. Okay, well, look, I am going to go to Paul, who's saying, thank you very much, Michael. Very interesting. What sense do you get from regulators as to ongoing appetite for this space? Are they more open and trusting overall, globally, or do you find that there are pockets of resistance and increased suspicion?
I can easily point to Turkey and India, right, as kind of like pockets of resistance. But typically what happens is they talk about how bad crypto is from like an AML, KYC, like money laundering perspective, as even though it's like a tiny fraction, right, of all the transactions kind of happening within the Bitcoin blockchain, to say, hey, Bitcoin is bad and whatnot, so we got to kind of shut it down. Ultimately, but that they see that as a risk to like the status quo, right? And so talk about the Turkish lira, what's happening there, and vis-a-vis Bitcoin. Lots of people want to buy Bitcoin, so they decide to kind of ban, transactions or whatever in each country. I think you'll continue to see that in countries that are just less economically stable or have a closed infrastructure and worry about capital flight outside of their country. Then there's going to be pockets like Switzerland, right? And pockets like Singapore that are certainly more progressive and open to the technology, and are trying to actually attract businesses to say, hey, we can be smart about this, and help it grow, right? While curbing the bad stuff, still watching it grow. The U.S. is kind of caught in the middle. I think the U.S. is definitely trying to figure out all the bad stuff. And I feel like that's what they lead it. That's what they lead with in the US is let's eliminate the bad as opposed to enhance the good. And enhance the good comes, unfortunately later within the US. But at the same time, there's so many jobs being created within the crypto ecosystem. All the businesses in crypto I know are hiring so much that like it's hard to divorce the growth and success of the crypto industry in terms of job creation, yet still be like crypto's bad, and so I'm certainly hopeful within kind of the US that we find some sort of balance. But if they don't, I think you'll see a lot of businesses just kind of leave, especially as like remote work becomes more normal kind of post-pandemic, and you're no longer kind of married to working, within or living within the United States.
Absolutely. I think you're spot on when you say that unfortunately there's too much leading in on only the bad and not leading in on actually what are the good elements of what's happening in the crypto and just digitization in general, right? The digital economy. And so rest assured, there are lots of different groups out there going to different parts of the US government in particular, trying to make sure that messaging is heard, but it's a long slog. It really does depend on the person or the group of people who are being dealt with. Some are more knowledgeable than others. Others have been fed, unfortunately, a lot of misinformation, bad messaging. And so again, it's going to take some time, but the growth is undeniable in terms of the jobs that have been created. And Genesis is one of pretty much every firm we know in the space who is hiring. By the way, Nicola's interviewing with you guys tomorrow, which is fantastic that he's
great.
So he feels
good luck.
Well done, Nicola. Thank you for joining us. Got a couple more questions for you, Michael, as we kind of wrap up over, can't believe we're blowing through all this time already. And got pick your brain a little bit more. In terms of global, Genesis is expanding internationally, and that obviously brings its own challenges. But in terms of customer client appetite, demand, what are you seeing in Asia that's different maybe from the US and Europe, if you want to touch upon that, but Asia in particular?
Institutionally, like Asia's leading. I don't think there's any kind of question as to the number of investors and their willingness to just go beyond Bitcoin. Right. I feel like institutions in the US are just kind of getting their head around Bitcoin and Ethereum. But coin number like 50 on kind of the market cap, I'm more likely to trade that with Asian clients than with domestically. And so I think UNS have a lot to kind of catch up with. But like our lending and borrowing business is 50-50, US and non-US, and non-US is growing faster. So that's going to flip pretty quickly. And so from a clientele basis, we'll see a lot more demand kind of coming from Asia. And the US is certainly kind of lagging in that regard.
Got it. And I want to allude to this. We sat in on a roundtable recently with a bunch of public funds, including some pension funds and, I think a couple central banks there are mixed in as well. But were you as surprised as I am that even though it was a low percentage, we won't disclose what the actual percentage was, but it was a low double-digit percentage, but they had already bought some crypto?
Yeah, it was unclear whether it was personally, or within the fund, right, that they represent, kind of work for. But yes, the fact that whatever percentage it was had already had some experience with crypto and exposure to it was awesome. Very surprising. And even more surprising, I think, was that over the next 5 years, the majority of the people expected to invest in Bitcoin or some crypto. And so I was like, wow, I didn't realize certainly the magnitude and how much work they've already kind of done to say, yes, we will invest in the next 3 to 5 year time frame. So it's further data around acceptance, and when sovereign wealth funds get involved, I mean, that's pretty much the spectrum right there, I think, of institutional investors.
Oh, right. I mean, for them, minimum check sizes are like 100 million, and that's a minimum, bare minimum. And when they decide to go put 0.5% in somewhere, that's just, that notion is huge. So yeah, absolutely something for us to look out for. And in terms of, we talked about growth, jobs, Genesis growing. We're in a boom market right now. When you think about the one major thing that worries you, what is it? Is it regulatory? Is it just pure business risk? What is the thing that really worries you if you're going to think about 2021 and beyond?
Look, I think I am. I've been through I don't know how many different bulls and bear markets we have. I certainly worry for the next bear market. And it's this rally that we've seen in the last 18 months or so is way more sort of institutional than retail. But the Dogecoin run that we've seen in the last few months, I mean, that's the stuff that really scares me personally. And regulators typically step in when retail guys lose money. And so, I am, we've talked about regulatory risk. I think about market industry risk. I feel like, a lot of the hacks and whatnot on the centralized custodian stuff, I think has gotten under control. I'm actually unaware of a pure play custodian getting hacked. But there's DeFi risk. There's smart contract risk. People will lose money. There will be, pump and dump and insider things kind of happening within the DeFi world that scares me. But I'm fascinated by the DeFi space and its potential. I think it's awesome, but it's experimental, and people will lose money, right? So I worry about blowups happening in kind of crypto, in CeFi and DeFi, that'll bring about just rash regulation. And that's probably the biggest risk to the industry.
Yeah, no, I completely hear you. And if you recall, remember the first DAO experiment a
Mhm.
few years back, what was it, 2016 or so? There was an error. There was someone who took advantage of a loophole. I'm not going to call it a hack. They took advantage of it and spent off a bunch of money. But back then, we're still talking about what, like 60, $90 million. I mean, anyone who's followed crypto Twitter recently, Fei Protocol, FEI, for those not familiar, raised what, something in the neighborhood of $2.3 billion, or
Mhm.
I believe, and they've had smart contract issues and can't settle right now. Maybe they've solved for that in the last day, but last time I checked, they're having issues. And all of this is pegged to the dollar. So this is where I get concerned, is that all these algorithmic stable coins or whatever have you that are being created, if you do decide to peg it to a fiat currency, which often a lot of them are, it does attract even more scrutiny when the numbers get this big. So I share your concern. I think the innovation is amazing, but we're talking about big numbers now. We're talking billions, not millions anymore.
Mm-hmm. And it's only getting bigger too. So I just hope people understand that it's still experimental, and some things will work and some things won't. And so I do urge caution on some of that stuff.
Absolutely. So, advice you have for those who are getting into this space today? What, besides also, if you're a trader, buyer beware and do your homework, what advice do you have for young entrepreneurs, older entrepreneurs, career changers that are trying to get into the crypto space? Because we're seeing a lot of experienced financial services folks also trying to get in now on the digital finance side, which we should encourage.
Absolutely. Look, you haven't missed it. I feel like people were like, "Oh my gosh, Bitcoin was $100 when Michael got started, and now it's whatever $50,000-$60,000." I've missed it. What's the next Bitcoin, right? Like, so I think you got to get out of the mindset of thinking that somehow you've missed the boat. In the U.S., we don't even have an ETF yet. We don't have a basic access product for the typical investor to kind of get direct exposure to Bitcoin. And once even the ETF is around, it's going to take a few years for that to kind of catch up and get traction. So I don't think you've missed anything. And as far as creating entrepreneurs and just kind of taking the plunge and kind of like leaving your current job and kind of doing it, like, you can't do this like halfway, right? You can't try to like have your job and then at nights you work on this side project that you hope will become a real thing. This space changes way too fast. But like, it's also like the most fun I've ever had in my career. And I think the smartest people are definitely entering it. And so if you spot an opportunity and you want to do it, my recommendation is to still go for it. And because I think you're able to react much faster and be more nimble than hundreds of thousands of employees it takes to turn a ship at a JP Morgan.
And to be frank, you don't have to wear all the risk by setting up shop on your own unless you really want to. You could join a firm like Genesis, who's hiring lots of different jobs across many different departments, and work for a growth company. I mean, you guys are on a torpedo growth trajectory right now, but the point being is you're still a private company, you're still growing, and frankly, there's a lot of growth opportunity there.
A ton. So I love what I do. I love, I almost said I love coming to work, even though I don't leave my house right now, but I love coming to the laptop every day and starting to work. And that excitement has been with me the whole time that I've been doing this. And so come apply for jobs, enter the industry. There's lots of open roles. We'd love to have you.
Wonderful. Well, thank you, Michael. We're going to wrap it up here. We really appreciate your time. And for those who are interested in learning more about Michael, check out his LinkedIn page. But also, if you're interested in learning about Genesis Global Trading, please go to their website and check out all the opportunities that they have in their services and offerings. Thank you. Over to you, Sophia. Thank you, Michael.
Thank you so much.
Thanks so much, Michael and Sandra, for joining us. And to everyone who dialed in today or joined, we will be sharing a recording of this webinar on GBBC's YouTube channel, and we will circulate that, as well as links to learn more about Genesis and follow them online. So we also host these every Tuesday, so follow GBBC or Global Digital Finance to learn more. Thanks so much, Michael and Sandra. and we look forward to the next one.